What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 14th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to discuss the elephant in the room. I want to talk about the silence that we've been seeing in both Bitcoin and the broader crypto market, the lack of volatility, and all the while, many people are sharing why this is bearish for crypto. I want to go ahead and explain generally off of history why this is generally a good thing. We have a lot of signs to dive into today, from market price to data analytics, that are going to back up this thesis. So hope you guys will stay tuned for it. And on top of that as well, we've got a sponsored review of the TaxBit platform. So if you need some help preparing for your taxes this crypto season, stay tuned. You guys won't want to miss it. All right, let's go ahead and dive here into the chart. Now, you all know that we've talked about all the key things here that we've been watching for some time. We called for the correction down here to the 30-35K range, but on top of that, a continuous growing trend here of higher lows from each and every pullback in price, right? We've continued to hold that here. Now, as you all can see here, as we're taking a look at the 3-day chart, and I'll just go ahead and dive into the daily so you guys can see what I mean. It really seems like volatility has been fading here in the market. There's not as much volatile swings as we were having for the preceding months. March has been a relatively simple month, just generally trending sideways. No significant trend downward, right? No collapse to 20K, imminent sell-off that people have been calling for. And on the other end as well, people have been saying, we're going to go right back up to 60K and 100K soon, super cycle inbound, right? Well, really what we've got right now is just sideways chop. Sideways consolidation. The market waiting for market order flow to go one way or the other, either for an immense amount of buyers to come into the market or an immense amount of sellers, right? And we're not seeing either of those just yet. Now, I will go ahead and claim one thing which is important towards the thesis, which is that so far the bulls are showing signs of strength. If you're analyzing within the hourly chart or the 5-minute chart, you're not going to see this. But if you're looking at the longer term trend here, the bulls are buying up Bitcoin here, right? They're buying the best available bids on the order book at a much higher range than where we did back here. I mean, this is something important to keep in perspective, guys. This is about, from these lows down here, about a 33% premium. 32% premium from around where people were deciding was a good time to buy for Bitcoin. And again, from those previous lows, right? Again, it's a slight premium from the previous correction range. Now, what does this mean for markets? It generally means that people aren't going to sit around and wait for a discount opportunity. And this is something that I want to go ahead and explain as to why the silence, why the lack of volatility is actually an incredibly good sign. Let's go ahead and bounce over to a tweet that I put out. If you guys don't follow me already, my Twitter account is @Nicholas_Merton. Put out tweets from time to time. I try to not tweet too often, but when I tweet, I try to really make a good point across here. And the thing that I tweeted was the way Bitcoin and the broader market is acting at the moment. Right now, I've seen it too many times to count. The weak hands have flushed out those who are kind of trading and speculating in the short term, who are fearful of Bitcoin, the short-term holders. And along with that as well, the silence and the sideways price action. This is what follows here after you've had major corrections of over 50% or more in price. You have silence for a little while, consolidation. And then you have step number 3. In the midst of the silence, out of nowhere, someone is going to come in and buy up big. Now, it can also play the other way. I'm going to be completely fair. There have been periods of time, like, for example, during the bear market of 2018, after the bull run of 2017, where we had consistent lows, we were having those lower highs, right? A clear descending triangle, which is a bearish pattern, right? Building up and then collapsing price lower. But on the other hand, this time around, we're seeing what is generally seen as a bullish pattern in a relatively silent environment. Those slightly higher lows, consistent resistance range, it's the opposite. It's an ascending triangle, right? And if we really think about it here, right, about the macro environment we're in right now, right, we should be seeing massive sell side action, right? If there is any opportunity for Bitcoin to enter into a bear market, right now would be the time. When there is global geopolitical conflicts between Russia and Ukraine, when there is massive inflation concerns, when there's all these macro factors, Bitcoin should really be moving lower, at least according to the narrative, but it's not. Perhaps all the people who sold Bitcoin or wanted to sell Bitcoin for those reasons got out of the market. And everyone else who's holding believes that, no, this is not the right time to sell my Bitcoin. I'll wait for a better price. I've got a longer term time frame horizon. I believe Bitcoin is an asymmetric asset. I know that it's not correlated with any central bank, that it can help me hedge against inflation as it has the best annualized performance out of any other asset class. Better luck next time. Go buy your Bitcoin in the spot market. You're not buying mine, right? That's the mentality that is dominating the market right now. Now, sure, there's not that massive wave of buyers just yet, for sure. We haven't seen it yet. But the key thing to understand is that you don't have to wait on some kind of narrative for that to happen. It will happen at one point or another. And I'm going to show you guys through the charts exactly what I mean. A few examples of this. So we can, for example, just take back past this summer, for example, you had people who were ultra bearish, people calling for Bitcoin to go to 10,000, 15,000, ridiculously low numbers, in my opinion. I don't mean to be rude, guys, but that was one call that just people were just going way off. There's no time in history where Bitcoin had collapsed through its previous all-time highs from the previous cycle, right? So people were calling for price to go below this range, and Bitcoin had never done that in a cycle. So again, we had peak fear here, and what do you know? Price started climbing up higher to new all-time highs. So we didn't see a bear market there. Let's go ahead and actually take a look at what's probably most relevant here, which is in this cycle, the consolidation period from June of 2019 all the way over into October of 2020. I'll make sure we get a good view of this here. Let's see if we can get the weekly here. That'll be better. So we can think about it in a weekly time frame. 70 weeks of sideways consolidation until we got back up to the previous relative highs and started to trend higher. 70 weeks. You guys want to know how long we've been going here? 48 weeks from the previous marked high here in April. Now I understand we did technically step above there a little bit here, right? But generally similar resistance here. 48 weeks. That's all we've seen. We've waited a lot longer before. A multitude of weeks more, months more than what we've had to do since April of 2021. And that's in this cycle. It's incredibly relevant price action. But again, we've seen stuff like this before. It's not just in this scenario. So I want to go ahead and highlight some of them. All right. Now, of course, again, if we were to be in a trend where you've got lower highs here like we did in 2018, this could be your warning sign. Even though you've got consistent support here, that could be your sign of a breakdown because the bulls are selling, right? They're basically, the existing holders are selling at lower prices, significant highs than they did in the past. That's your telltale sign that the market is not in the lead here in regards to going back to the upside. The bulls are not in charge, right? But let's go ahead, right? And we can take a look back here again at 2013, right? Got significant pullback in price, sideways consolidation. Boom, pop up much higher, right? So these kinds of periods of consolidation can happen, especially in a market like we're in now that's very credit and leverage driven. But there's another thing on top of this as well. Let's take a look here at the 1 year HODL wave, right? 1 year HODL wave is taking a look at unspent transaction outputs, or basically Bitcoin on the blockchain that have not been spent or sent somewhere in over a year. And take a look at this. Since back here in November and October, well, we're around 54% on the model. We're near around 63 to 64%. This is the highest range we've seen since August of 2020. Highest range we've seen since back here in January 2016. You want to know what happened every single time we got up above this 60% band? Bitcoin's price, whether it was exiting the capitulation phase of a bear market and rising up higher, or a mid-cycle correction, it's what drove the last two rallies. The supply contraction on the market, not enough Bitcoin on the order book to really satisfy people's needs, and market order flow just really starting to pick up. The euphoria, the excitement around the market picking up, and Bitcoin's price, of course, following with those emotions, and then investor interest. History is playing out yet again. And I can't tell you all how familiar it feels. How familiar it feels. It almost feels, and I say this in a positive sense, almost a little bit more boring than when it did back here in October of 2020. All we're doing now, as we're going through the later phases here, is we got to start recovering back up. It's a little bit of a V-shaped recovery here, right? You've got the decline, all right? And then eventually we start to trend back higher, right? This go around though, we've had more of a kind of sideways zigzag pattern here with higher lows, consistent resistance, even pressing a little bit higher than the previous time. And I think that a reasonable time frame we can expect for here, a little bit earlier possibly, is sometime in May or June. And that's again why we've been talking about this focus on Q2 really being where some of the excitement comes back. It's not going to happen overnight, but if we give it time, I likely would bet that we're not going to be entering into some bear market where prices go lower. Instead, prices can start trending higher. They can start entering back into price discovery at new all-time highs as we go into the later half of 2022. And that's where you could get your new Bitcoin all-time high between 150 to 200K, whatever metric you have in mind, right? We don't know exactly what level it's going to be. And again, very similar signs here in the Fear and Greed Index plotted over the Bitcoin chart, right? Multiple months here of red zones here on the Fear and Greed Index, right, between that 10, 20, 30 point range. And then again, starting to hover here more and more into the yellow range as we trend higher, and then into the multitude of weeks where we just had upward green greed within the market, right? We may still have a little bit of chop here till we really start trending higher and getting a lot of these green days where the exciting price action comes. But if you can be patient and you can wait for those few dozens of days, and I promise you all, it is statistically proven that there's a couple of key days out of each and every year where Bitcoin really makes upward moves. And if you're actively trading the market, if you're getting in and out and leverage trading and doing X, Y, and Z, you're likely going to miss them. But instead, if you're just holding crypto, if you just ride the wave, the ups and downs on the longer term upward cycle, the market rewards you. At least history tells us this, right? I'm not trying to sell some pipe dream. This is data analysis on what we can work with crypto markets. But unfortunately, a lot of people are not looking at that long-term time frame, and they aren't waiting patiently. People get so used to the going. When the going gets good, they get so used to it, and they can't give up on it. One last chart I wanted to show you guys, if you're concerned that this is a bear market. It's one we revisited about like a week and a half ago. And that's the BTC to NASDAQ ratio. Now, this is taking a look, of course, at the normal dollar pair of Bitcoin and dividing it. We're making a custom ratio against the NASDAQ 100, which is a futures contract in this case for the NASDAQ, one of the largest indices for US stocks, right? It's a broad measurement of the kind of more speculative and high-performing tech stocks out there. And what would you know? During this correction, right, the tech stocks are being outperformed by Bitcoin. Now, again, let's just really like step back for a moment, guys. The reason I wanted to revisit this chart is because it is incredibly telling. It is screaming to me as a trader and investor. Right? If I was seeing the opposite, I'll be honest with you guys, I'd be like, yeah, it might be time to probably step back from crypto for a while, right? I'm not married to crypto. I'll let you guys know, like we did back in January 2018 when I think a bear market's coming, right? I'll be completely honest with you all when I think the music stopped. But I have to say that technology companies, which are generally seen as less speculative, they're revenue generating, they're real companies in this case out there, sometimes paying dividends or doing really innovative things, right? This major multi-hundred billion dollar, if not multi-trillion dollar asset class, right? These equities are underperforming Bitcoin. And this is why it's so important right now. If you see Bitcoin as this kind of asymmetric macro asset, it's important to look at these ratios. It's important to look at the charts. And you'll see here that Bitcoin has continuously been outperforming since back here in November of 2020. It's up 86% here against the NASDAQ 100, right? And you can start to see this here, right? When we, for example, we look at our Bitcoin chart here, right? We've got these higher lows over time. We can't say the same about the NASDAQ. Take a look here, right? NASDAQ continuing to pile lower and lower. And all the while, pre-market here in the futures, of course, it's looking like it might start to rebound here. And I got to tell you guys, the weekly chart just doesn't look very good. A lot of companies look like they're on the brink of a major collapse. You got Facebook here, for example, that looks like it's ready to come down here to this trend line. You've got, for example, Amazon as well, right? That's been sitting sideways here since July 2020. Looks like it's ready to roll over, and this is the log scale, so it really can start to put things in perspective when you look at the standard chart. There's all kinds of different companies right now that look like they're ready to just roll over and take a pretty substantial correction. Microsoft, all these major companies, right? Now, I'm not here to give financial advice, go long or short any of them. My point here is this: the fact that crypto in this kind of macro environment is doing as well as it is tells me something. And when I look at the market order flow of tools like Bookmap, for example, which we cover here on the channel, and I see this kind of intense buy-side market flow where the CVD is leaning extensively bullish, right? Where there really isn't many asks later on upwards in the order book, where if we get cleared through this kind of short-term resistance, price could really start to rip higher again with the proper amount of market order flow. It's all it takes. And that's why step number 3 in that tweet, and this is kind of the closing remarks here, why step number 3 is so attainable when there's silence in the market. All the people who wanted to sell, most of them are out. Now we just need new trend, new buyers to come into the market, just like any other asset class. And whether that's going to be institutions, whether that's going to be people utilizing crypto to protect their wealth, no matter where they may be in the world, no matter what the narrative is, heck, I'll be honest with you, I don't know what it's going to be. All I know is that it's more likely than not the price is going to start trending higher in this type of environment. So, anyways, I've rambled on a good amount, guys. Let's go ahead and dive into something that all the while may not seem as important, is technically just as important as investing in crypto, and that's knowing how to properly pay your taxes for the close of the year. So let's go ahead and dive into a tool that can help you do just that right here in our sponsored review of TaxBit. Alrighty, everyone. So in today's review, we're going to be diving into a platform we've been fans of here on the channel for the past couple of years, and it's no other than TaxBit. TaxBit has one simple goal in mind: to make paying taxes on crypto as simple as possible. And the reason why this is such a breakthrough platform when it comes to crypto is that crypto, out of any asset class, is probably the most difficult to track. With numerous exchanges and wallets and different platforms like Celsius or BlockFi where you can lend your crypto to earn interest, it could be a total nightmare trying to keep track of it all. Well, in today's review, we're going to be diving into TaxBit here, which year by year has been making the process simpler and simpler, giving you all the key metrics you need in order to stay on top of your finances. Now, what I've got up here is a demo account on TaxBit just to kind of showcase how you'd actually go through navigating it and all the key components of it, but the user experience is incredibly simple, and we're going to dive through all the key major metrics and focus points here throughout the review. So just to kickstart things off, when you log into your TaxBit account after registering an account, you're going to be seeing the dashboard here. This is going to show you the total amount of assets and value terms that TaxBit's tracking once you've plugged in all your wallets. So how much I've got in my portfolio balance. So in this demo account, I've got $6,600 here. And we can also see the total realized gains or losses for the new fiscal year that we're in. So we're in 2022, so it's showing me those metrics, but we'll be able, as we're focusing on 2021, to be able to go back and see what we owe for those years, as well as generate our tax forms. So first off, let's go ahead and focus a little bit lower here on the toolbar on the side and focus on the Add Transactions button, because all the while we could go to transactions, we need to add transactions first. So what we've done here is we've plugged in a Celsius account here into the demo account for TaxBit. And what's really great is that you can add all kinds of different things. You can add various exchange platforms, pretty much any name you can think of in the crypto space. And on top of that as well, you can add custom wallets. So you might have a MetaMask wallet or a Coinbase wallet or some unique and a different type of wallet address, such as an ETH wallet or Doge wallet, whatever you might have. And on top of that, if that's not enough, if there's not a way to be able to track those different metrics, or maybe you have some really niche trades, you can also add manual transactions with key details as to what you paid for it and potentially what you sold it for. And on top of that, importing CSV files. If you don't want to do an API plugin, you can also import CSV files from a lot of your favorite names out there in the market. So once we've gotten a record of all of our transactions and we've got everything plugged in, we'll be able to see a list of these transactions here. Now at the moment it's in process technically, or it's technically the demo account, so it probably won't show everything. But here you'll be able to see all of your listed out transactions, and you can filter and sort them out. So you can go down to certain events that might have happened during a time window. Maybe I want to focus on 2021. Maybe for example as well, I want to find transactions that might be having a missing cost basis. So I can figure out, hey, maybe I'm missing some data here that is limiting us from getting a full window of what I paid for an asset and what I sold it for, to see if maybe I got a realized gain or maybe even a realized loss, which I'd want to materialize. I'd want to realize that loss so my tax obligation is lower. And this is, again, why I highly emphasize, guys, that paying taxes in crypto all the while it can seem intimidating is actually in some cases a pretty good thing, because it might be that you might not have the best trading year, and if you don't realize those losses, you could potentially be overpaying in taxes, right? So there's a lot of key things that people don't think about like that when it comes to paying taxes for crypto. Now, just like on the dashboard, we can go here to the coins, and this will showcase here our various different holdings here across the market. So you can see I got Chainlink, USDC, Ethereum. We've also got other sources here, which is basically where we can see where those holdings are coming from. As we can see, we just got everything plugged in from Celsius, but you would see maybe Binance or Coinbase if you were to click on the sources and actually see where these assets are being stored, just so you can keep track of it. And if we go here to the taxes page, this is going to start to give us a lot of the valuable information. So first off here, we can see what kind of short-term gains or losses we had. Now, it's not reporting anything because we've just plugged in our Celsius account, which is mainly depositing assets here in this case. So because of that, we're going to need a whole range of different exchange accounts out there, and you can plug in a variety of different API sources to get that full map, as well as your unique exchange accounts. You'll be able to see the short-term capital gains, long-term capital gains, which have different tax liabilities, and total income you've generated, miscellaneous income. So if you happen to, for example, have earned interest on any assets that you deposit in a platform like Celsius or BlockFi, then in that case, you're going to have miscellaneous income that, yes, is a taxable event, right? So it's important to understand that TaxBit's really giving you a full overview. It also allows you to adjust your cost basis method, or the accounting method, like such as FIFO and HIFO, to be able to understand how you actually want to go about doing your accounting here for the cost basis. And people will lean one way or the other. There's no preferred method, and I'm not a tax attorney, so I can't tell you guys which one's best, but both of them work good and help you to be compliant. And then on top of that, you can also get your tax forms generated. Now, the thing is here that it's just not displaying any because I haven't plugged in an exchange account, but if you plug in a variety of different sources here into a TaxBit account, eventually after a couple minutes of being able to take in those transactions, it will give you the proper tax forms that will allow you to report any capital gains or losses, miscellaneous income, etc. All there from the application. Now, that's one of the few things, though, is that unless you're using a variety of exchanges who will help to cover the cost for this, that's where you'll have to buy one of the TaxBit packages. And if you guys want to support the channel and you like the application, you can try plugging in everything first, get an overview of everything, and then TaxBit can help you make the final step of getting those forms generated and making the process as simple as possible. And you can use the link down below in the description if you want to support me out. Either way, it doesn't matter. I think overall TaxBit is a great application for this ability to just be able to compile everything into one source and be able to get those tax forms generated. And you can even go back as well and review previous years here, as well as the new fiscal year that you're currently in. And what's really cool here, I want to point attention to two last things here in diving into TaxBit. They have a new section here focused on NFTs. Now, of course, I don't have any wallets added just yet, but this is a new beta technology that's offered to TaxBit where you can actually start to track NFT trades. So maybe, for example, maybe you minted an NFT or bought an NFT and then you sold it on the market for some given price. This is where you can start to track those trades. So it's not just for ERC20 tokens, Ethereum, and other crypto assets. It's also for NFTs as well, which is really exciting stuff. So we can, again, continue to maintain that 360 view of the crypto space. And on top of that, this is probably the coolest thing about TaxBit. Now, when it comes to TaxBit as a platform, all right, you can see it as just a reporting tool in this case, to be able to, make sure I pay my taxes and stuff. That's great, and that's a really important thing to do, right? But on top of that, TaxBit can be your friend in this case. It can help you to understand where you can best optimize gains and losses. And for example, if you have, a position that you might be down on, let's say, for example, you bought a trade and it's coming up towards the close of the fiscal year, and there's a big paper loss in this case. Well, what you can do is you could sell that underlying asset in this case, realize the loss, and then purchase the same assets back. So you're harvesting, basically in this case, tax loss harvesting. So you can actually lower your obligation at the end of the fiscal year. There are all kinds of different tricks and trades like this that you can actually take advantage from in a completely legal sense when it comes to paying taxes. And TaxBit does its best to kind of guide you in the right direction. And a really important thing to know about TaxBit is that it's a platform built by CPAs that are heavily focused on the crypto space, right? The engineering team has done a great job of improving the platform over the years, and it's been built in a way to make sure that you can optimize your tax payments as much as possible in the crypto space. So that's a quick rundown here of TaxBit. This is just a very simple demo view here of what the platform can look like for you. But as you add more transactions, more data, you'll be able to get more of an overview of your taxes and your obligations. It might be as well that you may not owe any taxes. You might actually have a tax write-off in this case, or tax losses that you can realize. So I highly recommend you guys do it. So if you guys are interested, check out the link down below in the description if you want to learn more details. But I digress. That's it for today's video, everyone. Thank you all so much for watching. If you like this video, consider dropping a like, consider subscribing and hitting the bell icon. But until the next video, I'll see you all in the next one. Take care, everyone.